Hey guys, welcome back to the channel. In this video, I want to go over 3 stocks to watch for the upcoming week and talk about why I'm saying to watch particular stocks. Before we get into it, just to reiterate, not a financial advisor. Make sure that you do your own research. Also, if you find value in the video, smash the thumbs up button, subscribe to the channel if you enjoy our content. Hit the notification bell, that way YouTube can let you know every time we release new content. So let's go ahead and dive right on into it. First one we're going to talk about is GNRC Holdings Incorporated, ticker symbol GNRC. If you know what a GNRC generator is, then you know what this company is about. And it talks about storms in the Gulf and everything with hurricane season just kicking up last week. And I think this one is one to watch, and the technicals are setting up for a nice swing play on this particular stock in particular. So as you see here, we hit a high for the 184-hour time frame is 155.35. Hit it a couple times, got rejected, tried to get bounced back up there, got rejected and fell down, and seems to be finding support around that 137.53 area. And we are pretty close to being undervalued, which makes me think we could go a little bit lower than what we're seeing here. You see 138.25, could go down somewhere in the 137s before bouncing, and then possibly make our way back up into the 140s, which makes it, again, an interesting opportunity for a swing play. Okay, that's the first one. The second one we're going to look at is Tesla, ticker symbol TSLA. And what's going on this week with Tesla? Tesla shareholders are voting whether a massive 2018 payout package or pay package for CEO Elon Musk that was thrown out by a Delaware judge should be restored. Tesla's controversial CEO Elon Musk and his massive wealth are front and center in a shareholder vote this upcoming week. And the breakdown of ownership of Tesla for the votes: 40.21% for institutional investors, 13.66% owned by insiders, and 46.13% owned by public companies and individual investors such as retail investors. Now, why is that important? Because I think, and what we're seeing from articles, that people are hoping that it gets approved because it basically can hone in Elon Musk's focus for Tesla. He's getting a big pay package. They think it's going to help him pay more attention to the company and I guess do his job as CEO as opposed to just bouncing around doing all kind of other stuff. But anyway, technically speaking, if this does happen and if this does indeed should sign, then as you see here, we keep bouncing and hitting this trend line here. If we break above this trend line and hold, then we could come back and retest that 188.52 level. Your low right now on this channel, this time frame, is about 166.65 to be exact. And again, 188.52 is your first level of resistance. If we get past that, then you got 203.87 right after that. Okay, next one to take a look at is NVDA. The stock split did happen. So if you check that NVDA, and it was over $1,200 a share last week, and now it's $120 and some change. That's because they did a 10-for-1 stock split, and now we're roughly at about $120 per share. As you see, 1208.88 is what we were at Friday at the close, and then you divide that by 10 and you get your current share price right about 120. So I'm eyeing this one here because looking at the history of stock splits, typically within the next 5 to 7 days, those stocks that have split this past year have gone down before they've come back up. Okay, now I don't know if this is going to be any different, but I am kind of keeping an eye on to see if we can fall down closer to that $100 mark and then probably come in and buy from here. But this is a longer term, so I'm treating this like Tesla. I'm treating this like Amazon. I'm gonna get a certain amount of shares and just hold it anywhere from 3 to 5 years. And also to keep in mind too, if you guys are looking at this thinking you have to buy, if you own any type of mutual funds and you're investing in mutual funds, there are certain mutual funds, especially ones that are heavy in semiconductors, that are heavily weighted for NVIDIA. Like, I mean, over 10%. Some of them have like 25% NVIDIA. And so you basically already own some of NVIDIA if you think of it that way. If you have enough, it'll probably equal out to what you want to buy individually in the stock, and it's going to be a lot less volatile. For myself, I just know that I wanted to buy some at these levels and hold. And the same thing with Tesla, Amazon. I just think that those companies are going to eventually go back up to where they were pre-split. It's just going to take a long time, and I'm just going to let it sit there and kind of do its thing to where, 3 to 5 years from now, if I need to cash it out to make a major purchase or do something like that, I'll have it, hopefully. But other than that, again, if you don't have the money to put into NVIDIA individually, another option, like I said, is to look at some type of mutual funds. But anyway, so this is more of a longer term, but if it does fall down to 105, then it's going to be undervalued on the 180-day 4-hour time frame. And as long as it bounces off around the $100 mark, then 110 to 115 on a swing play would be probably pretty safe to take profits on it if you're just looking for a swing play. Another one to keep an eye on, obviously, guys, is GME. That's GameStop. And what's going to happen this week with GameStop, as you see. Man, this is just crazy. Now, a lot of people speculating about Roaring Kitty's Twitter post about him holding a bag and all this type of stuff. I don't own any of this one, and at this point I'm not getting in because it's just way too risky in my opinion. I hope people that are holding make a lot of money. I think that would be pretty cool if it did the same thing it did last time. I don't know. I mean, it seems like that Wall Street and the hedge funds and everybody else are just way too involved and watching this way too closely to kind of take them by surprise. But however, you didn't think it was going to go from $17 to $80, or from 21 to 50, or from 32 to 68. So this could be the next big pump that we see coming this week. I don't know. I do know it shorted more. They got more short volume now than it did in 2021. So, but they did issue a whole lot more shares. So I'm not sure what's going to happen, to be honest with you. But if this starts running, then keep an eye on this. Okay, and AMC actually kind of looks similar to what GameStop's chart is, just on a lot smaller level. So it went from 2 to 13, and then 4 to 6, and then 4 and some change to about 7. As you see, it looks pretty similar, just on a lot smaller scale, but this one has some upside potential, no doubt. If GME starts running, then you better believe that this one's going to come back up too and probably bust through some support levels and fly as well. So on GME though, let's take a look. So we're currently 24.94 is your support. First level of resistance 36.71, roughly about $45, 53 and a quarter, 63 and a half, and then back to 80. So keep an eye on that. It'll be interesting to see exactly what happens. So that's all I got for you in this one, guys. Let me know your comments below. Other than that, we'll catch you in the next one.